Hello, Brandon Chapman with you today. Just wanted to talk about gold as a Black Friday bargain. The question is it a good time to buy gold going into the end of the year and the beginning of January? And we're going to explore that today, and in particular, a more recent trend since 2014. Now, as we consider the backdrop at the moment, we have a Fed that is tightening. We have, as far as tapering its bond purchases. We're looking forward to raising rates next year. We have this tremendous pool of liquidity of $5 trillion, whatever the Fed has expanded the balance sheet over the last year and a half since COVID. And so we have all this sloshing around, and we're talking about inflation. And when you think about inflation, obviously you think about hedges for inflation, gold being one of those. Now, one of the things that we probably mischaracterize gold is saying, hey, in an inflationary environment, gold is a good investment. Well, during inflation, that's assuming that the dollar is declining in value. But stagflation frequently is a point where the dollar declines in value and economic growth is slowing. At the same time, we have very easy policy. So it does open the door for gold to do rather well going into the end of the year or during these times of stagflation. And we think about how gold might have done, for example, during COVID, right? We had the slight pullback here, but then we kind of ramped up and rallied going into the peak in August of last year. It looked like things were going really swimmingly well for stagflation until the Fed got a little hawkish back here. The dollar began to strengthen and gold began to lessen its run. And there's two ways to look at gold's performance: on a relative basis to the S&P, and the second is standing on its own in dollar terms. Because when we look at GC here, this is the futures contract for gold, or you look at GLD, this is a gold ETF. Either scenario, 167 for GLD, that is priced in US dollars. So this is a direct relationship or a relative strength between gold and the US dollar. Frequently, it's been the occurrence that gold has done well in dollar terms going into December, into the first part of the January, and sometimes even extending into February. And that's about what we're going to look at about right now. So as we look at gold, we're going to bring up a monthly chart here, and we're going to focus on the time frame since about 2014, when this trend really began to kind of evolve. And it's really been every year since that. We might get some support in December, rallying in, at sometimes in December, into January, and at times into February. So for example, we look at 2013, 2014 here. You notice gold put in its low, rallied and faded, but then caught fire. This is December, caught fire in January into February before peaking here. When you look at that run in GLD terms, it went from 114.75 to about 133, or about 10%. We look at it here, the low in November. This is 2014 into 2015. It was about 110, rallied to a high of about 125. Again, over 10%. We look at this run here, for example, in December. We formed our low in November, based in December, rallied in January, again, running from about 100, ultimately by the end of January, beginning of February, to about 122, or about 20%. We bottomed in December here, right? Rallied, faded a little bit to the middle of the range, then continued the rally into January and February. That rally went from about 106 to a high of about 120, about 14 points, over 10%. We look at the rally here in 2017, from a low of about 117 to a high of about 129. Again, a significant move, over 10%. You look at the rally here, ultimately bottoming in 2018 in that October, September timeframe. But again, we just look at the performance here in December. Low created about 116, rallied to a peak in February at about 127. So as we go back in the past year, every year's pretty much had a 136 to about 149, about a 10% move. Now, the only time it did not, we saw the November close, 165, rallied to about 183. That's about 10%, but from the beginning of December, slightly less. There was a gap in there that last trading day between November to December in gold. The point being is this has been, over the last 6-7 years, it's been a very good pattern that gold has rallied in the end of the year. And I think as you consider the more hawkish policy from the Federal Reserve, And we say hawkish, they're not, it's not like they're raising rates yet. They are just kind of tapering purchases. They are maybe more committed to raising rates next year, but there's a lot of money sloshing around. Expectation would be that gold will likely outperform the S&P. And this is the other factor, is not only that gold may do well in and of itself, but that gold would outperform the S&P. If you look at this yellow line, this is a ratio. We go 13, 14. The line is rising. That means gold's outperforming the S&P. We see the line rising here in 2014 to 15. Gold outperforming the S&P. We look at it here, 2015. Gold outperforming the S&P. Here was about equal perform in 2016 to early 2017. Equal perform 17, 18. In 19, we actually, to 18 and 19 rather, we saw some initial outperformance, but then early 2019, the S&P outperformed. Net though, from the November low to early January or through January, gold outperformed. We look at it last year, gold outperformed substantially, or 2020 rather, all the way into the peak. The only time it really didn't necessarily really tremendously shine was probably 2020 to 2021. But again, we're shaping up right now where Fed is probably a little bit more in a taper mode, more hawkish, maybe setting up for a likely limping into the market through the end of the year. Not necessarily seeing a large correction because you probably see gold fall in that case. But if the S&P or the S&P 500 just kind of limps into the end of the year, very strong possibility that gold does outperform both in relative terms and also goes higher. As again, you'll see here, this huge run we had, historic run to the August high, even a push in October in the SPX in November. This is, again, another very substantial run. We probably have pulled forward a lot of the potential appreciation going into the end of the year, into the beginning of next year. My expectation is gold will outperform going into the end of this year, beginning of next year. Then it may start to fade in that February timeframe if things start to look more bullish for the market, or in a correction, gold will likely retrace, but yet still outperform the S&P if there is a correction in the broader market, a stronger dollar and weaker gold. But there's a short window here between December and January that's traditionally pretty bullish for the shiny metal, and as we head through the holiday season. I just want to share this little tidbit, and maybe it's a consideration for things you're watching and looking for at the moment for opportunities. Again, something just kind of let it run in the background for a little while. Anyway, it's been a pleasure. Have a great one. Thank you.